Hey guys, welcome back to Be What Works Weekly. I'm Mike Wood with Be Coaching and Consulting, and today I am joined by Chris Delbridge with Urban Young. And Chris, I got to ask, what is it you do?
Yeah, so I hopefully to my referral partners, I make their lives easier. I specialize in home closings, partner with residential lenders, realtors to make their lives easier. And when I get a hold of their clients to round out their insurance portfolio to hopefully put everything under one roof for them. Long story short, I do insurance, but it's obviously more than that. It's organically built. That's actually how I'm actually here, through a relationship that was built to me, even to meet you guys, which is kind of cool.
That's nice. So what kind of insurance do you handle?
I have a license that says I do everything. I mainly focus on personal. The only really thing that we don't do is health insurance. So mainly like home, auto, excess liability, flood insurance. If you have toys like boats, RVs, stuff like that, we have coverage for that. But yeah, anything that you personally own is something that I would insure. Well, that
Okay,
I would set you
umbrella.
up with an insurance company to insure
I
it.
like it. I like it. Now, are you just local to North Carolina?
I built a business in Florida and moved it to the Carolinas. So we're based in Charlotte, and I do North Carolina, South Carolina, Florida, and Georgia. But something maybe as we expand through the podcast, we are growing as a company in other states, and it's really easy once we have the carrier access in those states for me just to get a non-resident license and be able to write in those states. So the 4 states now, but growing as we speak.
Okay, so what do you basically provide a service for your clients, your end clients, and then you have relationships with people that would be the greatest resource of referrals or people that need people that have clients that need your services. I sell real estate. My clients need insurance when they purchase a home, and a lot of people are coming from out of state, so they say, "Hey, who's a good local insurance person? I want somebody I can talk to, somebody I can see. I can go to their office if I need to." Um, what are things you specifically said, I have organically grown? And I think that's really important, especially for real estate agents, lenders, people in these service-based businesses, when we're not actually producing a product that we can hand over to them. So how did you organically grow it? Like, what were the key steps that you took to get the business?
Yeah, great question. Investing in relationships,
Mm,
not leads. I think that's the best thing. I mean, being in front of somebody, letting them know that you do insurance, I guess, is the first step, but then ultimately growing a relationship so they have faith to be able to transfer the belief that when they put you in front of a client of theirs, a la a lender or realtor, that you can handle that client's insurance type of deal. So, really just kind of investing in the relationship. So, because there's not transparently like being an insurance agent, you're typically like the end of a process and a home buying process. So
yeah.
I can't refer a ton of business to my partners, which I obviously, when there's opportunities to, I do that. But typically, most of the referrals come to me. So, man, I'm just big on service. Like, I'm big on communication. Everyone needs to know the things that they need to know, the things that they should get ahead of, and making sure that the component that I can control for them is seamless.
Yeah. Yeah, from the moment of handoff to, "Hey, it's all done."
Right.
So what's the system look like for you? I'm assuming that there is a system to it.
Explain real quick. Sorry, I didn't
So
understand.
so as soon as I'm a real estate agent and you're my guy here in Reno, which you're not in Reno, but I've got a client that's buying a house and John Smith, "Hey, I want to introduce you to Chris. He's my local insurance guy. Let him quote you." Now, you're also dealing in a business that can be fairly commoditized, right? So loan officers get rate shopped, real estate agents get hammered on compensation. So people go and say, "Well, I'm going to get a quote on this new house, but I'm also going to get it from USAA because I'm a USAA member, and I'm also going to go hit State Farm's website." And I'm just throwing out names. What does it look like from the moment that handoff occurs and that introduction happens, um, to help you build that relationship faster?
Great question. Now I completely understand. I think just reaching out to the client is the first thing, kind of setting the stage, kind of the expectations. Homeowners insurance, I mean, insurance in general, I don't think is very consumer friendly, but I think specifically homeowners insurance is very tough to understand. I think it's the more complicated one. I mean, the application is like 10 times longer than like any other type of insurance. So I say it all to say, like, being the expectation setter, saying, hey, that I'm Chris with Urban Young. I work alongside XYZ Mortgage in this case,
Yeah,
edifying the referral partner, knowing how they got to me, and
like that.
setting the stage of what it's going to be, and then just setting them up and knocking them down, man. Like that. Like I feel like if you say you're going to do something and you do it, that builds trust, that builds rapport, and then ultimately, yes, they can go get this other places. But when we have the ability to shop the entire market to find the best solutions, maybe it's all with one carrier. Maybe it makes sense to separate it. We do
Yeah,
what's best for them.
yeah, and letting them know that that's what's happening, right?
Yes.
We find on the real estate side that unless we unless we share what our value proposition is, what it is we're doing, what they get when they employ us, if we don't point it out, a lot of the time they don't see it. So in your case, it would be, well, Chris sent me over the numbers. The numbers mean stuff, but if you actually have that conversation of, hey, let me break this down for you, of what your options are, and yes, you're going to look at price, but let's also look at value, things like that.
Yes.
So,
I think the biggest, just to kind of another point to kind of piggyback off what you said, a lot of people when they buy a house, I'm not generalizing, I'm just saying, I see
you
this a
can, it's
lot.
okay, we don't mind.
Think about right now. That's the only time that they're going to buy insurance. Like what does their renewals look like? What is I mean, they're going to have to go back to the drawing board every year. So being sure to kind of set those expectations of that, yes, we're doing this year, but what that process looks like for years to come as well, because as long as they have a mortgage, or as long as they are putting a risk on somebody, to like an insurance company, to pay the policy, they're going to be obtaining insurance. And I mean, to be able to go to a company directly, to go online, like, it's just not a consumer friendly product. So that's why it's just like, I'm biased, obviously. But I would rather transfer the belief for somebody to just handle that for me, you know?
Yeah. Yeah, and so that brings up 2 points. The first is that, retention is really big in your industry. So somebody buys a house, I get compensated on the purchase or the sale, but that's it. Until they transact again, nothing happens. Loan officers about the same way. The only benefit is they can do refinances. So rates drop a point or so and they can refinance. So staying visible, staying engaged with the client after the sale is extremely it's extremely important. Number one, it's much easier to receive a sale through retention than it is to go out and acquire a new sale, right? The cost is much lower. The second is past clients tend to be extremely good referral sources, which is the cheapest source of business I can ever think of because it's really just time. So, what are the things that you do for your business to stay in touch with past clients?
It's funny that you say that, because there's actual statistics that revolve around. I think like new closings from like true referrals, which that's how we track things from like a residential lender or realtor that we build organically through. Typically close around like a 25 to like 40% clip, depending on the referral partner. Obviously, the agent. There's a lot of variables in there, but it can be as low as like 25%, because there can be somebody that sends you 30 deals a month, but you close three, and then you got to get to the why and figure that all out. But to your point, from existing client referrals, those close over 50%. That's almost a layup. So that's really like the best, ultimately what you're going after. And I think at the end of the day, like, CRMs are a big deal nowadays. I feel like an agent calling their clients repeatedly and just during midterm maybe is not the best idea, but just staying in front of like a drip campaign, understanding Google reviews are a big deal, how to refer, all that good stuff. So just, when somebody thinks of insurance, they think of us. Like, that's ultimately at the end of the day, on the client side and the referral partner side.
I like that. Do you do client events or anything like that?
Not yet. We do. So we're like, this is transparently a little new. Like, I just
Yeah,
celebrated a year being in
love it.
Charlotte and building this business. So I haven't gotten to the point where I've done something like that yet. That is something in the cards. In our offices in Florida, we have 10 offices, about to be 12 in Florida, actually. And we have one in Georgia, and I'm the one in North Carolina. But we have done client appreciation events in other states who are more established, I guess, is the point. So
Yeah,
that
I
is
like.
definitely something on the radar because the clients are super important, obviously. I mean, you mentioned it, retention. That's a word that's not used a ton in a lot of businesses because it's just, a lot of businesses are simply transactional. This is like transparently, like, I mean, retention is why you're in insurance. Insurance,
Yeah.
no one does
That's
insurance to just sell
not to
insurance.
not to
Man.
pull the curtain, not to pull the curtain, but the
You're not. Uh,
renewals is where the money is.
I'll
That's
speak
why
for
it's
everyone on that one,
well, and that's
So
why it's a marketable business. I mean, it's a sellable business. It's tough to sell a real estate business when, one person has been the face of the business and has the relationship with clients. But yes, you can sell a book, but you have to have the systems and the processes, and it has to be documented, and it has to be the reason somebody would buy a business is the expectation of future income with the system already there. And a lot of it on the real estate side is key person because it's been one person that's been selling real estate and they've got a big database, but that database likes them.
Mhm.
The database doesn't necessarily convert at a high level, whereas insurance, they trust the company. So Chris is now the face of Urban Young, even though you're one of 15 offices or something like that. So it's a wonderful business to have, and I know I have a lot of friends that have owned insurance agencies. They've sold them, they've been bought out. It's a great for somebody looking to get into a business that has nice recurring income and is driven by exactly what you said, building referrals through establishing trust and building rapport. Insurance is a wonderful, and it's one of the few industries that is mandated. I mean, if you're getting, like you said, if you're getting a loan on a property, you got to have insurance on it. People that own their homes outright still have insurance on it just for catastrophic loss. So opportunity is always there, and the referral, the options or the ability to take really good care of people and then have them go out and find business for you is immense.
100%. And it's to your point, like everyone has a car. If you don't own a home, you got a car. It's like there's literally everyone that I see every day I can help,
Yeah,
which is a
it's
kind of that's a cool business model.
opportunities everywhere. Yeah, have you ever heard the phrase necessary evil?
Yeah, I have. I
So,
have.
okay, cool, cool. So what's going on in the industry itself? Because I'm not in California. I'm about as close to California as you can get. But everybody I speak with from California, and then my friends in Florida, and you've got offices in Florida, have said, man, rates are just going through the roof, especially fire and flood. So flood, I believe, is totally optional, but the cost of flood can be pretty pricey. What are you guys seeing in the industry that's affecting the changes in prices, and more importantly, how does it affect the clients?
Yeah, that's a great question. I wish that was like a one size fits all answer. So I'll kind of
That's
have
right.
to, because each state is like a different story. Like Florida, for example, like I mean, they actually had to change things in legislation to fix the insurance problem, where that's not the case in other states. Like
Right.
then you're more worried about like South Carolina gets more catastrophic events than a North Carolina. So I mean, there's a lot of different. North Carolina has a reinsurance facility. A lot of other states don't have that. So they're all these different states have their own unique story. But I'm not going to get political on here, but global
No, it's okay.
warming is a thing, obviously, and events like tornadoes, hurricanes, massive events. I guess specifically to the Carolinas, Helene last year. I've seen homeowners insurance because North Carolina is a consent to rate state. I've seen some companies do 60% rate increases, where like that wasn't a thing before. So every state is in its kind of own unique circumstance and story, but I think the biggest thing is like the catastrophic events. I'm thankful. I mean, we're halfway through. I'm gonna knock on wood right now. Halfway through October, got to get to the end of November, but hurricane season's a huge part of that, and we've been blessed really not to experience much to this point. So hopefully that stays the course, but when things like that happen, all these insurance companies buy reinsurance. So basically, all these insurance companies have their own policy on top of their policies in the event of a catastrophe. So, like, if, for example, like Florida, if a hurricane went up the entire state of Florida and every policyholder is filing a claim at the same time, likely scenario, it's happened before. Basically, most of those companies don't have enough money on hand, and they would actually have to dip into their own policy, which is their reinsurance, pay their deductible to do that. And when companies do that, that makes everyone's insurance more expensive. So the less catastrophic events that companies have to do that, reinsurance is more affordable, which makes then policyholders pay less. So it's actually good when the insurance companies are profitable because they don't have to pass that cost to the consumer, if that makes
That
sense.
makes sense. Yeah, it does make sense. Yeah, and on the West Coast, we're more prone to fire.
Right.
Yeah.
And especially this year. I mean, that's a recent event from there. So obviously, not writing in California, I can't speak to that as much, just doing as much reading, but like companies, captive companies like State Farm, they took a hit in that. So that affects all everyone policyholder, even outside of California, how much they pay for that particular product. So it just really depends on each company's business plan and strategy of where they're going to write business. But then ultimately, they're predicting from a premium standpoint when they issue a policy of how much it should cost. And then claims come in and then they justify what happened to figure out what the rate increase would be next year with their reinsurance. So really trying to simplify it. And above my pay grade, I own an insurance agency that I represent all these carriers. I'm not sitting in a boardroom making all these decisions, just know enough to be dangerous, you know?
Yeah, I don't know if I'd want to sit in a boardroom and make all those decisions.
Sounds kind of boring.
I mean, the way it does affect housing, especially let's take Florida because the condo market has been hit really hard over the last few years, and it affects affordability ultimately. So people go, okay, well, I'm going to buy the house here. My property taxes are going to be here. My insurance is going to be about, this level. But then all of a sudden over the years, it creeps up and your payment goes up. You got a mortgage and you're like, I'm on a 30-year fixed, but I went from $2,600 a month. Now I'm paying $3,200 a month. My principal, my interest didn't change. It was my homeowner's insurance. So it does ultimately affect buying power, things like that. What are some things that if somebody were buying a home and they needed insurance, what are some things that they should pay attention to? Um, I don't know, pitfalls, questions.
I think honestly, just being able to find somebody to handle it for them. I think everyone has their own strengths. Everyone has their own profession. I totally understand the idea of a shopper that wants to do that every year, but that's just a lot, man. That's a lot. Like I enjoy it. I have a business that revolves around it. But if I wasn't doing this, I wouldn't want to do every single year, call 5 different companies to find the best product for me. So I guess just like finding somebody that you can, I mentioned it before, transfer the belief that they can handle that for you, you know? So at the end of the day, like for instance, like we have what's called a preferred client experience. So what happens is if somebody does home and auto insurance with us, it qualifies them to be a preferred client, which then allows to unlock basically proactive things being done. So we get to 60 days prior to their homeowner's insurance renewal. We assess what their renewal looks like with their current carrier. And then we actually send out a reminder to them to set up an annual review. That annual review gets set. We proactively shop markets prior to that call. And then we go through what the market looks like to justify if the renewal is the right option for them. Whereas a lot of people or a lot of agencies don't do that. And then the clients, the policyholders would then just get a piece of paper in the mail that says the same company with kind of the same coverages that they got to pay more for the next year. And they
Right.
never heard from their agent. So like that's the biggest, I'd say, pain point with a lot of clients. So we've tried to build an experience to prevent that, I guess, is the biggest thing.
Well, I mean, it's being proactive, and that's an investment in the renewal, especially if somebody comes and says, "Hey, look, we write your policies, or we've got you taken care of on the insurance, but let's sit down real quick. Did you make any changes? Did you?" I spoke with my insurance agent, and she said, do you have water detection devices in your home for the floors?" And I said, "No." And she goes, "Well, there is a savings, and it's a few $100 if you have these little devices that you can place on the ground, and they're going to notice water. So, and it's for flooding, and it'll notify you." And I thought, well, that's pretty neat. I said, "So it'll save me a few $100s a month. How much are those things?" "Well, on Amazon, they're less than $100 for three of them." And I thought, well, that's a no-brainer right there. I mean, that's a pretty good ROI. Um, but the insurance agent had to be proactive in telling me that. So now I've got water detection devices at the house. So those kinds of conversations I think are key in not just saying, "Hey, we're going to renew your policy and you're still covered, slight rate increase," but let me go through everything, make sure you haven't made any significant changes, there's no exposure, the policies are correct, the numbers are right, and I've taken care of you in the how much you're going to pay because, we looked around and this is where we are. And I'm working for you even though you don't see it.
Right.
That makes sense. I love that. And then
Versus
how do you
like
go ahead?
getting something in the mail where it's like, "What? Chris and his team never called me. I gotta pay more for" that's like the man, before this whole thing, like, because Florida was the biggest problem. I mean, with rate increases, you paid 4 times the national average. I mean, it's hard to control all those policyholders and being proactive for them. So that's why literally when we built the preferred client experience, we were like, we want to do this for everybody, but it's not actually feasible to do it for everyone. Who should we do this for? Who can we do this for? And we looked at the, like, to be honest with you, more policies per client does more for an agency. When you have home and auto, that's something that somebody can do, even if they don't even own the home. They could have a renter's policy to qualify on the homeowner side and still be a preferred client. They've given us the right to be their full-time agent. We have to give them a much better experience than somebody that just chose us for one line of business. So there is a little bit to it, but to your point, yes, I wish there was a world where we could do that for everyone. I don't think at the end of the day, like, we're all for profit. We're not a non-for-profit type of
Yeah.
deal. We just want to figure out with the people that we really want to keep, how do we keep them? And I feel like this experience is that.
Yeah, I like that. I like that. You qualify the client. It's easy enough. And there's a couple ways to do it. On the real estate side, we can do it on either price point or we pay attention to the clients that refer also. So clients that have purchased or sold more than once, clients that refer in business, things like that. So it works the same way. Um, the worst time to realize that there was a change in your insurance is when you get an escrow statement
Yeah.
breakdown saying, "Oh, by the way, your payment's going up by this much because your escrow account is extremely short." And the reason it is short wasn't because of taxes or payment. It was because of insurance. So, Chris, if somebody wanted to get a hold of you, what would be the easiest way for them to do that?
Yeah, the easiest way, I've included a link to share with you. There's a link tree that has everything. Like, you can
Perfect.
request a quote on there. You could, book a calendar meeting with me. You could go to our website, my social media and stuff like that. So I'm on Instagram, Chris Delbridge. Gosh, now I forget. It's Chris
That's
Delbridge
right.
05, I think it is. Yeah, and then urbanyoung.com, and there's a locations tab, but if you do urbanyoung.com/Charlotte, that would be the Delbridge team, and you could see it. You could request a quote through there. But I think the link tree that I shared is the ultimate.
Cool. All right. Well, if you guys have any questions specifically and you don't have an insurance agent, you need some help, especially if you're in Florida or you're on the East Coast, reach out to Chris. Otherwise, thank you very much. I appreciate it. I love the insight on actually the best part is how to take really good care of clients and ask them or have them get more clients for you. People like to share the things that they enjoy. So thanks a lot, Chris. Have a great day.
Yeah, thank you. Appreciate the time.